Hi, this is Ken Boyd with the Accounting Accidentally website. You see the website here with over 300 blog posts, and if you slide down here, the over 400 accounting videos. And what I'd like to talk about today is inventory valuation. This is on the FAR portion of the CPA exam, and the big areas in inventory valuation are FIFO, LIFO, and weighted average. So what I have in this spreadsheet is an Excel document that connects all three methods. So let's start with FIFO. This is all about valuing inventory. What price cost do we put on inventory? So let's assume that over these dates in October that a company purchased these items on the 1st, 15th, and 17th, and they sold items on the 25th and the 31st. These are the prices they paid, and if you click here, you'll see if you multiply that you get a total cost over here. Now, first in, first out is the first technique, and let's assume, and normally the FAR exam assumes, that since prices generally rise because of inflation, that later units purchased later are more expensive. So, the total cost of the inventory is $39.25, and this is a great starting point because costs for inventory end up in only one of two places. They're either in cost of sales because you sold something, or it's ending inventory because you still have it on your shelf. So we have to account for $39.25 in costs. We also have to account for 225 units. In blue we have what we purchased, and in green we have what we sold. So for the FIFO method, we buy, it's first in, first out, so the oldest units are sold first. So what we see is that we sell 50 at $10, and we sell another 50, the other 50 at 10 also. So we had a total of 100 purchased at 50. We sold 100, we sold all 100 at 50, and if we multiply across, you see that we get total cost of sales of $1,000. We work from the oldest units, $10 purchased on the 1st, to the newest units, $15 purchased on the 17th. The result is that the total cost we account for less cost of sales is our ending inventory right here. And you can check your work because if you take the sum of cost of sales plus ending inventory, you get the $39.25, which is the number up here. So what's left in inventory are the units at $12 purchase price and the units at $15, because if you slide down and you multiply across, click there, that adds up to $29.25. So the old units are sold first, and they're in cost of sales, and the new units remain in inventory, and they are part of ending inventory. And that's how you come up with the total cost you need to account for using the FIFO method. So that's an overview of FIFO. Also keep in mind that if you go to Conference Room, this link, Conference Room Feed, and you click on Events, you'll see that I've started a course teaching the 5 biggest topics on the FAR test, live courses. These are the topics I'm covering. So if you are interested in joining Conference Room, you'll receive notifications as to when these classes are going to take place. Thanks very much, and we'll see you next time.